This is not a joke. In the late 1990s, the financial elite triggered a billion-dollar economic crisis. It wasn't caused by Wall Street banks or tech stocks. It was fueled by this $5 plush toy, a calculated algorithm of artificial scarcity that drove the world into madness. Welcome to Go Wealth Logic. To understand the conspiracy, we have to travel back to 1996. On the surface, the American economy was booming, and the middle class was looking for the next big investment opportunity. But underneath, a psychological experiment was taking place inside retail stores. Suburban families began rushing through doors, causing chaotic scenes and absolute rioting. Average citizens were fighting each other, spending their children's college funds and hoarding toys like pure gold. It was a mass hysteria never seen before in consumer history. The media quickly labeled it as toy mania, but this was not an accidental trend. Every single piece of chaos was carefully engineered from the shadows. Meet Ty Warner, a brilliant secretive corporate executive who discovered a dark psychological truth. Human beings don't buy what they love. They buy what they fear to lose. Warner didn't build a traditional toy company. He created a system designed around starvation. He deliberately underproduced the dolls, shutting down manufacturing lines to restrict the supply. He then introduced limited editions, turning cheap soft fabric into rare, high-value historical artifacts that belonged in a museum vault. And then came his masterstroke, early internet manipulation. Using the primitive World Wide Web, his page flashed ominous warnings to scare consumers with two lethal words: retiring soon. The moment a toy was stamped as retired, its value exploded. It was a brilliant marketing trap designed to trigger a severe fear of missing out. A common $5 plush bear was suddenly elevated into a divine financial asset, an untouchable holy grail for speculative investors who wanted to get rich fast. By 1998, the speculative madness had infiltrated the high-end financial sector. Professional stockbrokers on Wall Street abandoned traditional assets to trade plush toys from their trading desks. A brand new internet platform called eBay became the central stock exchange for this madness. Individual auctions for a single rare bear skyrocketed to an insane $10,000. Even major private banks formally reviewed the trend, listing vintage plush collectibles inside multi-million-dollar investment portfolios. The bubble had reached its absolute peak. But every financial illusion eventually shatters. In 1999, the market became oversaturated. The company stopped retiring toys, and panic selling choked the entire market. The multi-million-dollar asset class collapsed in a single week. Millions of ordinary middle-class families who thought they were future millionaires were left completely bankrupt. Their life savings were now reduced to basements full of worthless, dusty fabric. The Beanie Baby crisis proved that economic value is nothing but a psychological illusion. If they control your fear, they control your money. The question is, what is the worthless asset you are hoarding today? Subscribe to Go Wealth Logic. Decode the system. Move in silence.